What's up, chart warriors, and welcome to Market Pulse. I'm absolutely fired up to dive into today's selection of high potential setups that could seriously move your portfolio needle. Whether you're a day trader hunting for quick wins or a position trader looking for momentum plays, today's lineup has something special for everyone. Before we jump into these charts, remember that everything I share today is purely educational. I'm analyzing patterns and levels, not giving financial advice. Your trading decisions should always be your own, based on your strategy and risk tolerance. Quick shout out: if you're hungry for more in-depth analysis, premium trade alerts, and our supportive trading community, make sure to check out our Discord through the link in the description. Alright, let's get into these 5 powerhouse charts that are showing some fascinating technical patterns. Hit that like button if you're ready to dive deep into some serious technical analysis. Starting with Semler Scientific, ticker SMLR, which is currently trading at $36.70, up an impressive 5.34% today. This healthcare technology company has been on quite a journey lately. Looking at the chart, Semler Scientific has formed what appears to be an inverse head and shoulders pattern, with 3 distinct bottoms visible over the past few months. What's particularly bullish here is that the stock has broken above its long-term downtrend line that had been in place since late 2024. The stock is currently trading between support at around $34 and resistance at $38.1, creating a well-defined trading range. The 150 SMA is currently at $44.52, suggesting significant upside potential if the stock can continue its recovery. What's particularly interesting about Semler right now is how it's pivoted its business strategy. The company has made significant moves into Bitcoin holdings, acquiring 3,303 Bitcoins at an average price of $87,929 each. This strategic shift makes SMLR's price action increasingly correlated with crypto market movements. Volume has picked up significantly, with today's session showing 641.9k shares traded, suggesting growing interest in this reversal pattern. For traders, key levels to watch include support $34, recent reaction low, secondary support $31, previous low, resistance $38.1, immediate overhead, target on breakout $44.5, coinciding with the 150 simple moving average. Next up is Marathon Digital Holdings, ticker MARA, currently trading at $16.37, up 2.61% today following a significant breakout from its downtrend channel. On the chart, Marathon Digital Holdings has been trading in a downward channel since the beginning of 2025, but has now decisively broken above the upper boundary of this channel. This is a potentially bullish development that could signal a trend reversal. Volume is extremely strong at 48.43 million shares, confirming genuine interest in this breakout. The stock is currently facing resistance from its 150 simple moving average at $17.23, which will be a key level to watch in the coming days. A break above this moving average could trigger additional buying pressure. Marathon Digital has transformed from its previous identity as Marathon Patent Group to focus on Bitcoin mining and holding. As of their latest reports, they hold 47,531 Bitcoins, up 174% year over year, making them one of the largest corporate Bitcoin holders. Key price levels to monitor: support $14.59, recent horizontal support, secondary support $12.05, bottom of previous consolidation, resistance $17.23, 150 SMA, breakout target $20 to $22. Recent analyst price targets have been raised, with Barclays increasing their target to $16 from $14. Keep an eye on Bitcoin's price action, as Mara has a high correlation with the cryptocurrency market. Moving to Celsius Holdings, ticker CELH, currently trading at $37.93, up 1.63% today and continuing its impressive recovery. The chart for Celsius Holdings shows a textbook rounded bottom formation, which is one of the most reliable reversal patterns in technical analysis. The stock has established a clear base between $20 to $25 and has now decisively broken above its 150 simple moving average, which sits at $29.99. What's particularly bullish here is the persistence of the move. CELH has maintained its uptrend despite market volatility and is now consolidating just below resistance at $39.18. This consolidation after a strong move up often precedes another leg higher. Celsius recently reported Q1 2025 earnings, with a slight miss on both earnings per share and revenue expectations. However, the company completed its acquisition of Alani Nu on April 1st, adding a second billion multi-billion-dollar brand to its portfolio of functional beverages. Key levels to watch: support $29.99, 150 simple moving average. Secondary support $36.17, recent pullback low. Resistance $39.18, immediate overhead. Breakout target $45 to $48. Volume has been steady at 6.55 million shares, showing continued interest in the stock despite its already significant recovery from lows. The PE ratio remains high at 118, reflecting the market's expectation for continued growth in the functional beverage category. Now let's look at the tech giant NVDA, ticker NVDA, currently trading at $129.93, up an impressive 5.63% today on news of the US-China trade truce. Technically, NVIDIA has formed a very clean bull flag pattern following its sharp decline from the March 2025 highs. Today's bullish move has pushed the stock back above its 150 SMA at $128.09, which should now act as support. This is a critical development as it suggests the correction may be complete. The chart shows a classic V-shaped recovery from the April lows, with today's volume coming in at a massive 330 million shares, clearly showing institutional participation in this move. The stock has now reclaimed the key $115.10 support zone that had been tested multiple times in April. NVIDIA continues to dominate the AI chip market, with recent news of sending 18,000 of its top AI chips to Saudi Arabia. The company reported record quarterly revenue of $39.3 billion in fiscal Q4 2025, representing a 78% year-over-year increase. Key levels to monitor: support $128.09, 150 simple moving average. Major support $115.10, recent reaction low. Resistance $140. Next psychological level. Target: previous all-time high of $153.13, with potential for new highs beyond. Analyst sentiment generally remains bullish, though some firms like UBS have slightly lowered price targets to $175 from $180, while still maintaining substantial upside from current levels. Finally, let's analyze CrowdStrike Holdings, ticker CRWD, currently trading at $440.20, up 2.51% today and showing remarkable technical strength. The chart for CrowdStrike displays a powerful long-term uptrend with an ascending support trend line that has been respected multiple times since 2024. What's particularly impressive is how the stock bounced precisely off this trend line during the April market turbulence. Currently, CrowdStrike is trading well above its 150 SMA at $365.64, which provides a strong foundation of support. The stock is facing immediate resistance at $456.59, which represents the recent high from late April. Volume is relatively light at 3.79 million shares, suggesting this may be a period of consolidation before the next move. CrowdStrike's cybersecurity solutions continue to see strong demand, especially following the high-profile outage incident that temporarily affected the stock. The company reiterated its fiscal guidance and announced expansion of partnerships with other tech companies. Key levels to watch: support $398.33, horizontal level from previous resistance. Major support $365.64, 150 simple moving average. Resistance $456.59, recent high. Target on breakout $500, psychological level and analyst targets. Recent news suggests US prosecutors are investigating the role of CrowdStrike executives in a Carasoft deal, which created some temporary pressure on the stock. However, the technical structure remains bullish as long as the ascending trend line holds. And there you have it, folks. 5 stocks showing compelling technical patterns that could present interesting opportunities in the coming weeks. What I find particularly fascinating is how these charts are responding to both company-specific catalysts and broader market trends like the US-China trade developments. Remember, the most successful traders combine technical analysis with proper risk management. Never risk more than you can afford to lose on any single trade, and always use stop losses to protect your capital. If today's analysis helped clarify clarify your trading outlook, do me a favor and smash that like button and subscribe to keep getting these technical breakdowns. Your support helps us continue providing this kind of in-depth market analysis. For those wanting more immediate trading insights and community support, join our Discord through the link below. We've been having some incredible discussions about market structure and developing trends that you won't want to miss. As always, this analysis is purely educational. The markets can change quickly, and what looks promising today might shift tomorrow. Always do your own research and trade according to your personal risk tolerance. Until next time, this is Market Pulse saying trade well, manage risk, and I'll see you on the charts.